All right. Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, October 26th. Mike Boutros with you on the horn. Good morning to you, Jay, Relly, and Steve, everyone in the room. Lots to go over, but not a lot going on. We have a lot of event risk on tap this week, guys, starting tomorrow. BOC interest rate decision, BOJ interest rate decision, heading into Thursday, we get the ECB interest rate decision, and then we wrap up the week with some major critical core inflation, both from the US and from the Eurozone. So an update on the seemingly spiraling inflation story comes in on Friday with that personal consumption expenditure, the Fed's preferred inflationary gauge. So the week is packed. For the menu today, quickly gonna go over DXY, Euro, Dollar CAD, Dollar Yen, gold. We'll take a look at crude, sterling, dollar Swiss, Kiwi dollar, and then a quick look at Aussie yen, and Bitcoins. It's a little bit long of a list. Bear with me, and we'll get through this. Try to see if we can't get our sights on this. So here's where DXY is trading. Here's our last update back on the 21st. And we're still in this range, guys. We're basically still holding this descending formation. Tried to push through that, didn't quite make it towards the lows either. Here's what DXY looks like. First, on the weekly chart, just want to highlight again the basic premise that we've been talking about, guys, simply pulling off of this major resistance. You have major lateral resistance at 94.47, 94.65. But then again, I'm going to keep stressing this. You have that longer dated slope, okay, all the way from the 2011 lows, also resistance. So the game plan was to get that kickback, to see how deep that kickback gets if we get closer to uptrend support. But at the end of the day, we need to top 94.65 to get resumption of the uptrend in dollar. As long as we stay below, I think we're going to have to temper our expectations. You could get some further dollar weakness. Here's what it looks like on a daily chart. So again, on whole, it did look like it made a break of the weekly opening range with this move here last week. Even if we rally, we're below the median line. All right, remember, here's the intraday. I was looking for a drop towards the November high day close. Ideally, the 100% extension off the high, so two equal legs would give you 93.36 to 93.40, this range here. You still could get it, but the risk all depends on resistance holding at the median line. So even if we push higher today, as long as we're below that slope, I still think you risk that drive into 93.36. Again, from an event risk standpoint, you're clear on the dollar. You have durable goods tomorrow, but I don't think it's going to be the major market mover. With PCE at the end of the week, that's going to be the biggest player. Aside from that, it's all the interest rate decisions from Canada, Japan, and the Eurozone. So no change to any of the levels. It's a little messy. Not really excited, not really involved here, but we basically rallied back into where last week's open was, but a basic 38.2. Okay, that's resistance. We're still holding that downslope. If we break below the median line, specifically 94.15, that's the resumptive move. But as long as we stay below that slope, I think the top side may be a little limited here in the near term. Okay, so keep an eye on that as we get deeper. Specifically tomorrow, obviously 60% of this is weighted to euro. Specifically as we get into the, Thursday's euro ECB rate decision. May get a catalyst here to get this popping one way or another, but that's DXY. Euro's in a similar spot. So here's euro. And here's what euro looked like first on the weekly charts. Again, we crazy rebound, right, off those slope, off that 2019 swing high, that 100% extension, nice pivot zone there. Not much to look at on the weekly chart. Key resistance here is basically 117, 116.95. So when you look at this on the daily chart, it begs, what's the word? There's more wanting here, okay? It's found wanting. At the end of the day, yesterday actually materialized into an outside daily reversal, okay, which is actually typically a bearish development. So DXY and euro, both of those have just been, non-starters for me. I haven't touched either of them, but I'm kind of trying to get a gauge here. If this is the case and the outside reversal we got has more downside to go, that's your bullish inval. So if the dollar has a little bit more upside, like we said right before resistance, euro a little more downside, 1569, 1580, key support, key support. ECB is on tap on Thursday. Ideal scenario here for me, if we get a spill towards 1570, 1580, I'd love to see some exhaustion lows here for the pop higher if we are going to move in euro. But from here, you're right in the middle of the weekly range. It's not really an effective new positioning to get into on the euro. So another one where it's another wait and see, but you have major event risk on tap under 48 hours, likely to see some play here in euro. Questions? So here's where things get interesting. Aside from euro is dollar CAD, because obviously we have those interest rate decisions tomorrow. So again, on tomorrow for dollar CAD rather. So again, euro, no change to any of those levels. As far as dollar CAD's concerned, here's what this thing looks like. So for Loonie, remember the weekly chart has us at major support, 2018 swing low, 618 retracement of the yearly range. You're looking at 2314 to 2360. It's a bigger range, but you got slope in there as well. So we've been trying to assess, what kind of price action we're getting here. Momentum flatlining right ahead of 40. Here's what CAD looks like on the daily charts. Okay. Remember here, we actually posted an outside reversal off the lows last week. We talked about that the day that happened. That was off the 1618 extension. The recovery has been rather limited, right? Not much upside draft on that. Key resistance is still 2440. That's what you need to breach on a closed basis to validate a near-term breakout. Right now, what is this? What is this rebound? So the intraday chart looks like this. If this is a near-term bear flag, that break actually would have us commanding another move towards 2290s, 2280s. I just don't get it. I just don't. If this is a move here today, guys, and this is a break, we should see acceleration to the US Open. If it doesn't, not going to stress it. Not going to stress it. That's a big support. I don't want to press another short into a major support. So for me, if dollar CAD doesn't give us a decent weekly opening range break at least, I'm kind of sitting on the sidelines. I think the risk is for exhaustion as you hold this major downtrend into key support. I still think the risk is for exhaustion. Now, this move right here still might spill another drop and then exhaust. I don't know. But what I do know is so far for the week, you've set an opening range low, you've set an opening range high. We're heading into Tuesday trade. Let's look to see if that break gives us any formulation here in a near-term bias. But all things held constant, the downtrend has not only tested downtrend support, but also just basic lateral support. Is this the extent of the bounce? We'll have to see. Look for a break of the weekly opening range here. Again, the BOC is on tap tomorrow. No change expected. The interest rate 0.25% from there. I'll likely see again the commentary really be the market mover here. Boring start to the week on some of these. I recognize that. But you can't force the trade. Once we get the moves, I think we'll get some more directional biases on these breaks in the near term. Remember, the markets are kind of a little bit of a hangover. It's been quite a stretch. So we'll see here on dollar CAD. If we get another stab at that low, if the weekly opening range breaks to the upside, like I said, 2440, that's your breakout level. Anything northbound of here, you're essentially looking for a little bit of a recovery, relief rally, as it were, for the dollar. Questions on Loonie? Okay, number 3. So dollar yen, here's what we've been following for quite some time. This thing has been holding slope like no one's business. It's insane. Recall we covered this last week. I was a big fan of the turn from uptrend resistance to the downside. This was the last level that we were looking at, 1387. I was looking to see a larger pivot there. We got the pivot into the close of the week, but that drop stopped right at uptrend support. Look what's happened for the last 24 hours. Unreal. Unreal. So guys, if this breaks out of the downtrend, or if this breaks out of that slope, you're looking for resumption. You're looking for 1450, you're looking for 1490 again. No change to those levels. 1, 2. Okay. At this point, now that we've sort of pivoted back below and back above, this needs to hold support. This needs to hold support. So again, if you pivot back below 1378, while that is still within the weekly range, it would be a break, a clean break of a multi-tested upslope. 1 test, 2 tests, 3 tests, 4 tests. I don't know if you want to count that as 5, 6, and 7, but the point is the slope is holding. So if we break this, which it looks like we're on pace to do, 114.50 right back on tap. 114.90 is the big level that converges on the median line. Key resistance here if we break out higher in dollar yen. My problem with that rendition, and that's just to look at this trade right from the near-term prospects of what price action is doing. My problem with that interpretation is this. This is big resistance. 1492 into 1445 was the level we've been talking about ever since the breakout over here. Okay, you got the 786 retracement from the decline off the late 2016 highs. You've got the 2018 highs, you've got the late 2019 highs, you've got the median line. It's all stacked up right there. One other thing that I will warn you about, momentum remains in overbought condition. As long as that condition holds, the bulls are in control. So it's dollar yen, right? Respect this trade. I do think that the exhaustion risk for the upside still remains well below basically 1455, but at the end of the day, resistance to resistance, support to support. That looks like a pretty healthy hold of uptrend support. Questions on dollar yen. So you got the BOJ on tap tomorrow too, okay? It's basically Thursday morning in Japan, Wednesday night here in New York. No change expected there as well. Devil's always in the commentary, but that's the event risk that's on tap here for Japanese yen as we hold right below these highs. Any questions on dollar yen? That's number 4. All right. Also from that update, I did want to go over where we are looking or what we are looking at with gold. So this is a tricky trade. I redid the weekly chart here. I presented it yesterday. Here's what it looks like for gold. We ditched that downslope, but what I wanted to highlight was where we are as resistance right now. And namely, it's the 52-week moving average. So it's just your simple yearly moving average, which has made major inflections over the last couple of months and years. And then what I showed you guys yesterday in the webinar on daily effects, basic trendline support. 1, 2, 3, 4, 5, break, resistance. Okay, so it's a pivot for me. Okay, it stands basically at 1803, if I'm not mistaken now, or 1807 was it? 1807. Okay, that's near-term resistance. The thing with gold is this. Okay, you're working on your 3rd weekly advance here, but forget that. What I'm looking at is that you have momentum at 50 on the weekly charts, and then you have basic resistance. Now, the problem here is that the resistance levels, guys, are stacked. Long term, you know I'm bullish gold. My problem here on this advance is that we need a lot more momentum, in my opinion, to get through this stack. The stack is this: 1807, 1825, the 618, 1849, the high week reversal close we made in January. That's the high week close for the year. So these 3 levels for me are what the problem is, or are the major problem rather, with trying to, call the breakout in gold. You need to get through those 3 levels. Until we pop 1849, I'm cautious. Okay, I think you can get a lot of false breaks and get a lot of stabs, a lot of pullbacks. At the end of the day, the basic focus is this range break. You need to clear 1849 on the upside to mark resumption of the broader uptrend. If you break below 1739 on the near term, you're heading back towards the yearly lows. So is this pivot going to be the defining factor here? That's what I'm looking for into the close of this week. Okay, so this is the weekly chart from 1,000 feet up. If we get a little closer on this, okay, here's what it looks like on the daily chart. Again, that slope in blue is what you saw on the weekly chart. Kind of messy, but here we are. 100% off the low, 1809. Looks like it's holding for a third consecutive day. Watch this. If we pivot back below 1791, which is the 618 of last month's range, it's also former trendline support. 1, 2, 3 breakout. So it should be former resistance, now support. And can't see it, but it's the 100-day moving average here in blue. All right, look at that. Slides right in there. So for me, literally, it's all about 1791. If you pivot back below 1791 on a closed basis, you do risk sort of that pullback, that blow off, if you will, for the gold bulls. If this holds into the close, again, the onus is on 1809 break, and you're back into that 1825, 1849 levels. But for me, that's the pivot I'm looking for today over the next 24 hours. Questions on gold? It's pretty precarious here. It's pretty precarious. If like I said, if 1791 holds and we push higher, it bodes well for that rally towards 1830, 1825. My problem is that, again, momentum is sort of failing right into 60. This is your correctionary resistance. If this holds and we break lower, does not bode well for the gold bulls. So over the next 2 days, we're at a critical, in my opinion, humble opinion, inflection here for the gold trade. Any questions on bullion? Okay, number 6, here's British pound. Oh, let me get you the closer picture. I never showed you the scalp. Here's the scalp. So no change to any of the levels. They're right on top where we left them on Sunday morning. Here is the Sunday open. Okay, we just rallied back into that 100, pulled right back. That's still the range of influence for the immediate trade for gold. Looking for a breakout here to give us a tell. Next up is, I guess it's crude. Is it? Yes, I guess it's crude. Here's crude oil. Big resistance, big resistance, and big resistance. We talked about this yesterday in the webinar on Daily FX. Here's oil, unbelievable touch of uptrend resistance and failure yesterday. No change, as you can see right here. Perfect touch of the level, pull back. We're essentially shutting in a doji right now on the weekly chart, but that doesn't matter. We'll have to see what the weekly close looks like. Guys, we're on our 10th consecutive week to the upside. Uptrend resistance. Man, if we're not going to get exhaustion here, I don't know where you get it. All right. On the daily chart, it looks like this. Looking at that 2013 low, which converged right on uptrend resistance near 85.61. Here's the oil chart now. And here's that perfect touch. Almost. I think we missed it by a couple of cents. The high was 85.38. We were looking for 85.63, 30 cents. But you can see that perfect touch yesterday and closing lower. You're at uptrend resistance. Now, momentum isn't overbought on the daily chart. That's not an indication for us to try to short this at all yet. But certainly, you're coming into an area of interest. Okay, the January 2010 high is 87.14. That would be your breakout level to assume a run on 90. But the basic premise is, all right, look for possible exhaustion here. Look for possible exhaustion. Now, the last time we said that was here into 81.90. That worked for a day or two, but you didn't get much kickback, right? It just kind of paused. This is a bigger level. This level is on suit with what happened here. Okay, major uptrend resistance. We break through 85.61. There's 87.14, but I wouldn't get, excited on a major breakout until that breaks. So the name of the game for the next couple of days that we're looking for exhaustion for the near-term uptrend off one of these two levels. Not a major reversal, just an exhaustion of the uptrend. And here's what it looks like on the intraday. Okay, so as it stands right now, right, you just opened the week. Here's your weekly open. You set the weekly opening range high right into that resistance level, 85.61. Here's the pullback. Weekly opening range is set right above former key resistance, now support, right below current resistance at the uptrend. okay? You need to break below last week's low to shift the focus lower. So if the weekly opening range here buckles and we break lower, don't get faked out. We could go for a test of last week's low and then rebound. That's the break. That would suggest you have a little bit of a correctionary trade here for the crude breakout. I want to make it absolutely clear, guys, that this is a strong uptrend. And again, I've said it to you many, many times, whether it's the fundamental picture, whether it's the technical outbreak, or whether it's the geopolitical environment that we're in with the administration and their stance on energy prices are likely heading higher, okay, on every account. But there will be interruptions to that trade. Here's your first major level of confluent resistance, not just lateral, it's also slope. Questions on crude? All right, that is number 7. All right, here is the British pound. That was next up on tap. I gave you guys an update on that just yesterday. Really like where this is trading, just because it's a really clean sort of setup to start off the week. Look, we didn't really do much. The weekly opening range is now well defined right below that resistance range at 38.32 that we were talking about into the start of the week. So remember, the 100% extension comes in at 38.32. That caught the advance last week. Here was the pullback. We're looking to see if support holds. Support hold at 37.35. Again, you're looking for that resistance zone. It's exactly how this panned out. So now you have your weekly opening range right above last week's low, right below major resistance. Respect this breakout. A topside breach, you're looking for 38.65. And then again, 39.31 would be the breakout target. But this is pretty big. This is pretty big. Let me just take a step back. Here's sterling, again, on the daily charts. Remember, the rip off of downtrend support. Here's downtrend resistance. So even if this thing pops up into 38.65, don't get faked out. That's still downtrend resistance. And that's been my concern with this sterling trade. Okay, here it is. Here's the daily chart now. This is what it was back into the open yesterday. Reversal, right back at that high right now. So still on the lookout for possible topside exhaustion, maybe on a stretch towards 38.65, but this is the basic premise of what you're looking at in sterling. And again, I'm going backwards here, but here's sterling on the weekly charts just to give you a better example of where we are. You can expect, I wouldn't say expect, it wouldn't be outside of the realm to push into that nestled resistance zone and then pull back. But that's sort of the focus here for British pound. Any questions on sterling? All right, that was number 7, 6, and 7, 6, 7. All right, dollar Swiss. Haven't been operating on this one, but there's been a lot of questions on it, so I just did want to highlight. Yesterday was actually a really nice play in that it was a very well-defined outside daily reversal off of confluent support. If you take a basic lateral, if you take a basic slope rather off the highs, a parallel of that from the low you made in October, caught right there. That's also 618 retracement of the advance off the lows you made in August. So an outside daily reversal yesterday did ship the focus higher. I was telling you guys yesterday, main resistance up at 93.34 into 92.34 into 92.42. The rally failed right ahead of that, and we're actually closing lower on the day, or we're set to close lower on the day. We haven't even opened up US trade yet, but you get the picture. Here's what it looks like on the intraday. The basic premise of the trade that I was telling you yesterday was, this is pretty big support. Okay, this is pretty big support. Here's the rebound, looking for that stretch towards that 38.2. Look what happened overnight. You missed it by 5 pips. Is that the exhaustion pump? Is that all we're going to get? I don't know. I don't think so. I would still be holding to get that stretch towards 92.33 if we can get it. At the end of the day, we're coming off of downtrend support. We're just looking for a rally towards downtrend resistance. So whether that's 92.33 or whether it's a stretch towards the upper parallel, this is where I want to see a little bit more of a profound impact. So if you're holding dollar Swiss, that's sort of the outlook from here. If you buckle below 91.52, it's quite problematic. Okay, there's nothing until 90.90. You guys remember 90.90, 90.80? We were talking about this like for months last year. It was a huge pivot zone down here. So that's the risk if we break below 91.50 is another dump, another 60 pip dump to complete 2 equal legs off the high, or excuse me, the 1618 off the high. Questions on Swissy? Roland, I don't know if that was you asking about it, but here it is. Okay, last but not least, or at least no, on this update, we also covered Kiwi. So New Zealand dollar, I've been tracking this really, really closely. I've been trying to get a beat on it, but the momentum is pitiful. Like you're getting better game, you're getting better action rather with Aussie, but Kiwi's just, man, the only thing I'm confident about with Kiwi is the resistance zone we're at right now. So let me just take you back from the top down approach. Here's New Zealand dollar on the weekly chart. The big resistance zone that we're talking about is a 3-layer stack, right? The objective yearly open, not Mike Boutros' opinion, not Jamie's opinion, fact. 618 of the entire yearly open, again, not Mike Boutros' opinion, fact, right? 2 equal legs off the low is that 100, fact. So that gives you 71.89 into 72.46 as a critical zone of resistance. It's where we capped out last week's advance. We're trading there now. So we're at resistance, we're at resistance, we're at resistance. There's nothing else to say really. We're going to see what happens here today. There's no signals here that are telling me to fade this just yet. It's good to see that momentum is not an overbought condition, but this whole resistance zone is stacked. I really can't stress that enough. Forget last month's high, okay? 71.89 to 72.46. I don't want to buy into this. If we're going to short it, this is where the exhaustion would be likely. It would have to be against that top side of the range. Nothing here to put me in that short yet. And if this buckles, it's probably going to be a pretty extended ripper. But for now, this is major resistance. Here's what it looks like on the intraday chart. All right. I wish there was more. I wish there was more. I don't have any real defined structure for the advance. Obviously, the breakout that we noted last week, that ripped, and here's resistance. What do you do here? Are you just going to take a stop against the high? I don't have any indications yet, any near term, like even on a 10-minute, I don't have really anything that would put me in an attempt to try to short this yet, but we're in big resistance. So the point being, guys, I don't mean to confuse anyone. For today, heading into the US trade session, I'm looking for exhaustion. I'm looking for exhaustion into this zone. Anywhere in here might be an exhaustion high that we can fade. That's my focus here on Kiwi. Questions? Big, 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 big resistance zone. All right, so speaking of Aussie and Aussie yen, we went over both of those in the last couple of updates. So let's take a quick look on where those stand right now. Here's what Aussie dollar looked like again into the 21st. We had come into that weekly resistance zone and it looked like it wanted to hold. That resistance zone is right here, 75.42 into 75.31. You have the swing lows from back here in March. You have 2 equal legs off the low. You have the 52-week moving average. So it's the same similar setup as Kiwi coming into major big resistance. But the near term looks a little bit cleaner here. Here's Aussie first on the daily chart. Okay, again, 50 off the high from the year. 2 equal legs off the low for the year. Slope resistance. This is just a parallel of these 2 reference points. If you take that parallel, 1 touch, 2 touch, 3 touch, 4 touch, confirms that slope. Adds more to the resistance range at 75.42, 75.56. Questions on Aussie? Quick reminder that the RBA interest rate decision is actually on the 1st, so heading into the start of next week and the first calendar day of the month, we'll be looking to see what the RBA has for us on that front. So keep that in mind if you're holding any Aussie positions, but still cautiously looking for exhaustion. All right, so that's Aussie. The sideways on that is Aussie yen. I haven't really been writing about this very recently, but it was such a major breakout that we've just been following essentially like the daily charts on this. And this is what I wanted to show you as we were ripping into the highs. So the level was 86.20. This is a chart that I hadn't looked at in a couple of months before this breakout. It converged on the 75% parallel for the upslope. So this line right here, there it is. I mean, outside daily reversal off the high suggests exhaustion. I still think that's the case, guys. We might probe into another high to probe into that slope, but below 86.20, I still think the risk is for that near-term pullback in price off of uptrend resistance. So also will bode and tend to move pretty strongly with broader risk. And right now you're seeing obviously markets are just ripping. Here's the SPX pushing to a fresh record high here today ahead of the open. So don't think that there's a appetite per se for an Aussie yen short, but I am looking to see again this topside exhaustion, if it does materialize, might give us a decent pullback. If we do just get a washout or at least just an exhaustion in the SPX, I mean, this thing has been ripping. So that's a quick note on Aussie yen. I know a couple of you were asking about that earlier in the week, so I just wanted to kind of give you an update on where that stands. Last but not least from my list is Bitcoin. And again, a popular trade that continues to get all kinds of media attention. I can't even tell you how many reporters have reached out just over the last couple of days to ask about Bitcoin. And I went over with you guys yesterday in the webinar, if you were there. I think I saw all of you there. Was the parallel from the 2020 breakout, right? So that's what I'm actually working with a little bit more aggressively right now. The parallel in price action from the October 2020 breakout, which is basically exactly what happened here with the 2021 October breakout, would suggest we're in for a prolonged period of steady gains. You might get some washouts, but they're going to be pretty minor in comparison to what we've been getting. I don't expect to see another, 50% rundown like we did back here on that April decline. So big resistance right here at 66,325 into 64,895. That's the objective yearly. That's the record high, excuse me, from back here in April, and it's the 1618, or excuse me, the 618 extension of the ascent, right, off last year's low. So just to get you the reference points for that fib extension, 1, 2, 3. Okay, and you can see that the 618 extension literally caught the highs perfectly on this pullback. So near-term support, 58,984. Bullish invalidation all the way down at 53. I don't think you get it, but that's the level that if broke would fundamentally change the technical picture. And a breach from here on the upside, the next targeted level is 77,600. Questions on Bitcoin? Here's the, by the way, I just wanted to show you this because I was laughing at it this morning. This is the exact slope, guys, that I showed you, I think it was 2 weeks ago on the initial break as we were breaking here, right? Even though it, the bottom end pivoted on both sides, look how clean this remains to be. Again, if we break from here, 57,000, you want to see that hold. Top side breach from here, 77,000. Questions, comments, concerns on Bitcoin? All right, that is everything that's on my list. If you guys have any other specific questions or trade setups, do let me know. Otherwise, we'll go ahead and wrap it up here. Keep in mind, again, the biggest event risks that you're going to see over the next 24 hours are going to be tomorrow Heading into durable goods for the US might be an ancillary read, but later that day, tomorrow at 10 o'clock, we get the BOC interest rate decision and the BOJ later that night. So these interest rate decisions have the potential to offer a catalyst. The biggest player, in my humble opinion, will still be on Friday. We'll give you an update again when we meet on Thursday. But Friday's PCE read, I mean, you've heard inflation talk all about the town this whole week, whether it's CNBC, Reuters, Bloomberg. Everyone's talking about whether inflation is sticky or whether there's something that's transitory. I think we're all waking up, or at least they're finally waking up, that it's not as transitory as they thought. But that's all to say that puts added emphasis on the PCE read on Friday. The Fed's preferred inflationary gauge, the personal consumption expenditure, is expected to narrow a bit. So we'll see if that improves. We don't have any forecasts for that just yet, so we'll see if any pop up right before the release. All right, guys, I'll leave you there. Best of luck trading, and I will catch you on Thursday morning. Jay, Aurelie, and Steve, everyone, thank you. Have a great day. You too. Cheers.